Can I ask that we stop talking now? Thank you. I said thank you, which actually means be quiet. So if I look here, number one was a straightforward one, eh? Because I know it's just the difference between the two carry values or the two cost price, because land and buildings has the same carry value and cost price. It never changes. Okay, so now I say 4 less 3 gives me 10, like that. 107080. Okay, so I know I'm going to do the cash flow. So already here with my buy fixed assets, I'm going to put 107080 because I know I bought it, ne? So if I look at vehicles, so this opening, you should know by now, you just reverse. So it's going to be 413 plus 458. Ne? 413 plus 458. And that's going to give me number 2, which is what? 87,2000. Okay. Now that depreciation, if I look, they gave me the vehicles here at the bottom. They say the business had 3 vehicles. This is the beginning of the year, right? Then they say depreciation is 20% on cost, but they don't tell me when the vehicle was sold, so I can't calculate it the normal way. But I can calculate it. How? Huh? How did you do it? With a T?
I said the carrying value minus the disposal of the carrying value. So I said the 116,800 minus the 102,800.
Okay, where's the 11600?
Yes, that one.
That one?
Minus the 102,800 in the note.
And then you get the depreciation.
For the vehicle.
Okay. So if you think about it, when you do the asset disposal T, ne? You must got the accumulated depreciation here. You've got the selling price, ne? And you got the cost price. Okay? Now, they tell us that we sold it at carry value. Okay. So, what is the carry value at this stage? We don't know, ne? Because they gave it the 1st of July. I am spinning here. Can anybody help me? So this is 280. Ne? The carry value here at this stage is the accumulated is 163,200. I don't understand how you got the depreciation.
I said that 116,800.
What, yes?
The carrying value at the beginning of the year.
Yeah.
Minus the carrying value when the asset was disposed, which is in the note.
Oh, okay. I get what you did. So if you look here, this 102 is the carry value. So the 102,800 is the carry value when it's sold. Right? You guys get it? And this 116 here is the carry value opening, start of the year. So the difference is going to give me my depreciation on that one, which is what? 14,000. Okay, so I've got, oh, my nose keeps itching. So I've got the sold one. There is no new. So I just need the old ones. And the old ones, they say the depreciation is 20% on cost. So I would suggest that I would rather do both separately, because most probably one of those two is going to be residual. So let's quickly look. Oh, my nose. My nose keeps itching. I'm allergic to you. Okay, so if I look at this, I got vehicle 1, vehicle 2, vehicle 3. I have sorted, it's 14,000. Okay. Vehicle 1. If I go look at vehicle 1, I can see the carry value is quite small. Okay. So vehicle 1 is 240 times 20%. So can you already see that's 48,000? So that is not going to work for me. So what am I going to do? I'm going to take the 15 less 1. So vehicle 1 is 14,999. Right. Vehicle 2 is easy. It's the 352 times 20%, and that gives me, okay, I can't hear. 74,100.
74,400.
Okay. So in other words, my depreciation is the 14, the 70, and the 14. So that gives me 99. Happiness. So, the next one they want is number 4, which is the addition at cost for equipment. So the addition at cost is most now just the difference between the two costs. So it would be the 456 less the 340. So it's 116. So that 116,000 I'm also going to put in here. So I already got my assets that I bought.
1,186,300.
And I already got the one that I sold. Can you see? I sold it at carry value, so I just put that carry value in. Okay. Yes. So while we are already busy here with investing, can I ask, is there a fixed deposit? Let's quickly go look. They gave me the income statement. They gave me the balance sheet. Is there a fixed deposit? Remember, also look for the words financial assets and investments. Is there any? No. So we can literally close this one off. It's going to be negative, an outflow of cash.
1,084,000.
Okay. I want you now to please finish the rest of the cash flow. I give you 10 minutes. And here we go. So let's start. Cash from operations. Can I be honest with you? For me personally, I like to do the investing and the financing first. I like to work it backwards. I don't know why. So I just think the first thing that is really easy marks is the cash. Right? It's really the easiest thing to have marks in. So let's go look at that. So if I look, I want to know the bank overdraft and the cash in the bank. Okay. So if I look, opening I have 52 less overdraft 96.2. So that gives me 91, is that right? 91. Closing, there is no bank overdraft, no cash, which is weird because don't they have a petty cash and a cash float? But in any case, so we have a bank overdraft of 905. Sure. Now, just looking at that, don't you just get the chills? Because it went from 91,000 to 905,000 overdraft. It's always almost a million rand overdraft. Just by the way. Okay, so what was the net change? So minus 905 plus 91 gives me minus 814. So there's a 814,000 outflow of cash. Now I just want to remind you that this was papers set in 2020, which was the big COVID year. And what happened in the big COVID year is most businesses weren't allowed to operate. Ne? Just keep that in mind. Can I just... I know I went off script there, but I just want you to see how things like the current situation happening now is reflecting in the cash flow statements. Can you see that? This year is not a normal situation. It means that they had to go beyond. Okay, so let's go on. Now let's go see what they did with their shares and their loans. Now, obviously, your loan is the easy one to get marks. So let's go look at loans. Do they say anything about loans? Yes, there's a mortgage loan. There's no extra information about the mortgage loan, so we can just get the difference there. So I say, can you see it increased? Can you see we made a very big increase, 920 to 1142, and an increase in loan is an inflow of cash, which is how much? 22,000.
222,000.
Can you see that this business is scraping for cash? Oh, what did we forget to do? We forgot to put in our brackets, ne? Brackets. Okay. Okay, so now let's go look. Do they give me anything on shares? I hope they do. Oh, wonderful. What do they say? They talk a lot of things here, and I want to show you what you're supposed to do with this. And for this, I need you to be focused. They say additional shares were issued. Can you tell that they didn't tell you how much? And that would be the issued shares. Okay? Then they tell you they were repurchased. Okay, so what are we going to do? On your answer sheet, so that the marker can see it, you're going to quickly draw an ordinary share capital note. But listen to me. Don't do things in detail. Don't use your rulers. If you want to use your ruler, use it like this. Don't go draw lines first. You don't have time for that. So you just know you have an opening, and if you look there, you have an issue, you have a repurchase, and you have a closing, and you draw a line for the closing. That's all you need. And now let's see what information they gave me. So they gave me an ordinary share capital opening and closing balance, right? So the opening is 2040. The closing I'm not going to write down now, because I first want to see if the information they give me was recorded. Okay, so let's just wait for 3 seconds. So they say, additional shares were bought. Jurgen convinced the directors to repurchase his 80,000 shares. So Jurgen, 80,000 shares, right? And he was paid R4.20 per share. So you can immediately go do buyback of shares, 80,000, R4.20, because what do I want here? I want the total repurchase price. We paid him R4.20. Okay, so what is 80 times R4.20?
336.
Okay, but now, coming back here to the ordinary share capital, we have a problem because here we want the average. Okay, right. So now let's go read. They say the average price was R3.05. Thank goodness. So R3.05 times 80 gives me, say again, 244,000. Okay. So they don't say anything about anything that it wasn't recorded. So we assume that that capital there is the closing. 2287,500. What can I calculate now? I can calculate the issued. Can you see they didn't ask me to do the ordinary share capital note, but they actually asked me. You see. So now I reverse. 228 plus 244 minus 2040 gives me 49. Okay, and I'm just going to do this so that they know there's my calculation. Okay. You can even go crazy and do this. So, now I'm done with my financing, so I can block on top again. So 3 minus 336 plus 491 plus 222 gives me
377,500.
okay. Why on earth? Can I ask you this? Why on earth do you think they would buy back shares from someone if they are already in a cash bind? And doesn't this go against the company law that says very clearly a company is advised very strongly not to repurchase shares or issue dividends if their cash flow is not strong enough? Why do you think they did this?
Because I think not really because you are sold to a director because you want a bit more power.
I think you could have done it for the more power, but I also think you have to remember in COVID people were strapped for cash. Ne? So maybe they sympathized with this shareholder, maybe because he says he convinced the directors. So maybe he's a close friend of theirs. A long-standing servant. What? So maybe he's been loyal to the company for years and they felt they should do it for him. You don't know the situation. Okay, because they didn't tell us. Huh? What did they tell you? Where? Oh, so later on they're going to say he was a... Oh, he's a close... And that is why. And can you see now they're going to ask you there, why would this fact be a problem if you were also a shareholder? May I first? Okay. Can I ask you, why would it be a problem that we are repurchasing shares, ne? Above average price, I might add, to one shareholder? If you were a shareholder, why would it be a problem for you?
It would be unfair.
Because number one, did they publish it? Was it told to everyone that it was going to be sold? They didn't say. Number two, the company is already struggling with cash. So you would see this as a bad decision from the directors, which is not in the best interest of the company. Ne? What is that word, best interest of the fiduciary duty? They didn't adhere to their fiduciary duty to act in the best interest of the company. they acted in the best interest of their friend. Why isn't it in the best interest of the company? We don't have the money. So can you see, if you look at the loan, we increase the loan with 200,000. And then we go and pay this guy 300,000. Does it make sense to make a loan and then buy back? Yes. Must I bring it down? Okay, so we've done income tax paid is done for us. Let's do dividends paid. I'm going to look for the opening and the interim. So what is the opening? I go to shareholders for dividends. It's 60,000. And what is the interim? So interim, did they tell me? They say dividends. They give me.
Why don't you just say information E and then just use that amount?
But I'm going to do E now. Because E tells me what is the total dividends. So I need to take the total of 170 and subtract the final. The final, I go to my shareholders, 30,000. And now I see the interim is 140,000.
So does the 170 include the one that you didn't pay as well?
Yeah. The total dividends equals interim plus final. So I put in the 140. So I paid out 200,000 dividends to my shareholders, which you would think cash, but on the other hand, maybe it's good that they did it because they don't want their shareholders to withdraw their shares. Because if they all want to go and sell their shares to get rid of it, what's going to happen to the market price? It's going to drop extremely. Okay. So, interest paid, I get in the income statement, there's only interest on loan. And now I need to do my note 1. Okay, did they give me note 1's format? Did they maybe give me note 1's answer? Where? So, you can do it different ways. Next. Let's quickly see. I don't see that they gave it to me. Where do you say? You shook your heads, yes.
Not really. I said cash flow from investing activities, cash flow from financing activities. Is it equals to?
You can reverse it.
Yes, that's what
So what you did, yeah, because you can also see they didn't give you information here for inventory or for receivables or for cash. So you don't have the option really to do the note. So you have to reverse. So the reversing is literally going to be, you're going to take the 814, so minus 814, minus 377, plus 108 equals 107. They actually made quite a lot of profit if you look at the tax, ne? But they don't have a lot of cash left. Okay, so now I'm going to say, to get this one, I'm going to say 107 plus 86 plus 200 plus 625, and it's going to give me a positive. I reversed, so it's all the orange. The minus 814 minus plus equals. I can't hear. So it's not 107. Yeah, but I'm not going to see.
It's negative.
Is it a negative? It's an outflow. Okay. So it's an outflow of cash. We didn't even make cash with our income statement. Can you see then, if we had a lot of profit, that most of that profit is most probably because we sold stuff on credit. So our sales was boosted with credit sales. Can you see that? So we didn't even get cash from our income, from our profit. So what is my cash generated from operations?
804,260.
Which we can see, yes, it makes sense because there's a lot of tax there. Eh? So I just want to quickly just go back here where we say the minutes of an annual general meeting reflected the following statement. Please guys, they have a AGM once a year. Don't for any reason write hold more annual general meetings. Ne? A lot of you guys write things that doesn't make sense, and I want you to go read at your case study presentation, whatever that thing was. Go read again what you write. So they say, we the shareholders express our concern over the director's decision to repurchase 80,000 shares during this year. Provide one concern expressed. And now, you guys, this is where you guys lose marks in question 2 and 3. They always want evidence. So you need to show. And what is your evidence? Your evidence is that outflow of 814,000. So you say there was a cash outflow of 804, or you can say the bank, it ended with a negative cash of 905. Either one. It's just that is your concern. There isn't cash to buy back. Yes, so you can say the cash equivalents increased from a negative 91 to a negative 905. Yeah, and always look at the mark allocation. Look at the mark allocation. So they only want one concern, meaning that concern is going to be 2 marks and the evidence is going to be 2 marks. Okay. Next, you can also say, an investigation of this matter, we've already discussed this. So you can say this is unethical, this is not following, no, instead of saying unethical, rather say this is not good corporate governance. And they're not following their fiduciary duty. I don't know how to spell this. Luckily, I don't teach English. You can also say, nepotism, unethical. It wasn't. It's nepotism because they are relying on someone inside to favor them above other people.
Is nepotism the one where you
is
have
with
a
family?
Child and your child is
It's not.
favored?
I always think nepotism. Let's just make sure. So nepotism.
Using your connections in your pay to gain
It's
using your connection to gain pay.
exactly. It's about connections. Nepotism is the practice amongst those with power or influence in favoring relatives, friends, or associates. So it's not just family. Okay.
And it's not that bad, man. Nepotism is not that bad.
Just don't go on camera.
I mean, everyone gets it.